A very good day to all present. I welcome you all to this webinar preview of financial modeling. I'd like to introduce to you our presenter for the evening, Mr. Ravi Kataria. Ravi is an ex-UBS investment banker. He is currently working on advising clients onto trust and fiduciary services, investment banking activities, etc. He is also greatly engaged in the fields of international trade finance and structured transactions. On that note, I request Ravi to commence the webinar.
A warm welcome to everyone present in North America, US, Canada. We have a strong connections, or you can say relations, with the bankers and the investment bankers from Wall Street. The reason being simple. When we still see today, even if Asia is rising, more than a third of the transactions of the world that happen in investment banking arena. That includes your mergers, acquisitions, project financing, the different kind of transactions in private equity space. So a third or more than a third of that occurs happens from North America. A company from North America would be involved therein. Canada is known for its metals and mining sectors. Well, as part of UBS, we used to advise the clients from that division. And US is, of course, everybody knows that this famous technology, banking, and services, as well as manufacturing. So the idea is, in today's world, when you talk about the pension funds, private equity space, investment banking, pick up any field from financial world, you would find that the valuation is an inherent part of it. Valuing an asset class or valuing a combination of an asset class, which can be called as an corporate or incorporated, is the most important thing when it comes to working upon those subparts of sectors. Let's take a simple example. If you're advising on a mergers and acquisition transaction, and if you're selected or hired in a team, say at an associate level or as a VP level, unless you understand the models, you cannot prepare a pitch. If you cannot prepare a pitch, you cannot negotiate a transaction. So it is like it's like a bread and butter when it comes to financial world. So that's what we are going to learn. That's what the classes which we are going to arrange from EduPristine's side are going to contain. We're trying to cover the financial modeling through which is, say, slightly different across the sectors. So we'll cover it from various sectors' perspectives. How does an information technology company's model looks like? How does a civil construction company's model looks like? How does an infrastructure company's model looks like? And how does a bank's model looks like? So based on that, what we are going to do today is we are going to give a slight bit of demonstration of what's going to be content or what's going to be taught in these classes. We'll pick up a very small example. That's how to take up your balance sheets and prepare them as per our model's requirement. So, for example, in this case, we'll see that for LinkedIn. And the first thing is balance statement, or balance sheet as we call it. It's inclusive of assets, liabilities, owner's equity. Liabilities and owner's equity sum up to total assets of the company. Now, this is where your funds are coming in. This is your funds are getting blocked. Okay. For example, assets are like resources a business owns. I mean, they can generate cash for you, dividends for you, interest for you, profits for you, or they can get a liquid onto themselves. On the other hand, you have liabilities. which are to be paid back. If the company is in today's world, for example, if they have a good bargaining power, they'll keep their creditors on wait. Okay, so they'll not pay them for 1 month, 2 months, and so on and so forth. And they'll take in form of a cash from their debtors. Like they'll try and do maximum revenue or sales in cash format. Take an example of automobile company. Okay. They take everything in cash in, and when they have to pay the onto ancillary or ancillary suppliers, they pay it in 2 months or 3 months kind of credit period. So they'd be running a negative current ratio. Okay, so they would be running a negative or say less than a unity current ratio. So probably around 0.7, 0.8, 0.9, like that. Now, when you learn the theory part, you would have learned that an ideal current ratio is anywhere between 1.2 to 1.1 and 1.4 for any large corporate. But that's not the case in few companies. Suzuki, for example, from Japan. They're running a less than a unity current ratio. So why that would be? Because they have a good bargaining power in the market. So they're changing dynamics. So it depends upon what your business model is. In finance, there's nothing called a written rule. Everything is dynamic. Okay, so summation of assets where my funds are getting blocked would be equivalent to my liabilities and wherever I'm bringing my capital from. So capital can be an equity or a mezzanine instruments, or it can be a debt pure form, funding through a fund-based facilities and non-fund-based facilities, like an SPLC and so on and so forth. Now this would give you a clear idea of where my money is going into. Basically, if my debtors are not paying me, that means it is blocked there. It's blocked in form of a plant, etc. Any kind of long-term investments which I've made into my subsidiaries, or of course subsidiaries investments doesn't come in here. If it is a pure form of subsidiary, we merge we consolidate the financials and report minority interest. If we don't own 100% of that company, but we do more than 50%. Yeah, so this is where my money is coming from. This is where it's getting blocked. What we are trying to do here is, now we look at a simple example of how to take a balance sheet of LinkedIn and prepare it in something like this format. Okay, so we'll take it in a real time and prepare it. Why we are doing this? The reason is really simple. This would form the beginning of financial modeling. So we are going to demonstration of what it's going to be in the beginning. Then we'll see the complete financial model of, say, in form of cash flow statements, in form of valuations, trading comparables, and so on and so forth. So this is just the beginning that we are going to touch base with. Now let's build this for LinkedIn. We'll go on to LinkedIn's investor relations. Let's see their reporting basically. Of course, in modeling, we primarily take the yearly filings. So I'll simply narrow this down to yearly filings and download the Excel. And so there are various formats available here, but for the 10K, the latest one, I'll download the Excel. I already did that, so let's open that. Okay, so here it is, complete 10K for the FY 2012, because 13, they would be filing it now in another month or so. For FY 2012, complete 10K for LinkedIn Corporation. So now we'll straight away, when we want to form a balance sheet, would jump to that particular sheet. Yeah, so this is a balance sheet. We'll copy all the content from assets till whatever they have reported. That's the total liability. Okay, and take it into a new sheet. Okay. Before we do that, let's leave some spaces, like 4 rows and a column, basically. So I'll simply copy paste. Now the shortcut for adjusting the line spacing is Alt-HOI. The moment I press that, this would auto-adjust based on the content. The first thing which we have to do is mention the currency in the denomination. So this is, in our case, it's into thousands of dollars. Okay, so we write it into our own format in USD or in Canadian dollars based on whatever the currency is. In this case, it is USD. In thousands USD. If we are preparing a profit and loss account, we'll mention except per share data. Okay. Or you can, on the safer side, you can simply mention unless otherwise noted. Okay, the moment you write this, reduce its font by at least 1 unit, and you can do an italics and paste it onto the right hand side, and so that it's easier for the one who is referring into. Now, whenever we do financial modeling, we have to go from the lowest, that is FY 10, 11, 12, 13 projected, 14 projected, and so on and so forth. So it will begin with, say, it will begin with 2011 and 2012. I had to mention it in FY format. The one option available with me is to simply mention FY 2011, but that translates into a general formatting, as you can see. But I want it into a number format, or where I can do some summations. Say FY 12 plus 1, I'll get FY 2013. Yeah, so what we'll do is we'll do custom formatting. For that, I'll press Control 1 after clicking these 2 cells here. In customs, I'll simply write in inverted commas as Excel understands it, any kind of alphabets, and write the semicolon there with a space there, so that I can see FY space 2011. So now this retains its original format. For example, if I were to do plus 1 till, say, FY 18, and I want to project for next 6 years. Okay, so I'll simply do custom formatting here. Instead of FY, I can write FY 2013 projected, and that's it, done. So in this way, we are not duplicating our efforts in the sense that we don't have to type it down all the time. Yeah, so that's why we use custom formatting. So there's just one sort, we'll use it in various formats and so on and so forth. So once we are done, like for 11 and 12, I'll simply go and copy paste data for 11, starting from assets completely. You can see there are a few numbers in dollars there. Of course, we have to change their formats, because whenever they begin with, they're mentioning that. So I'll simply copy paste a normal number and then paste as in Control-Alt-V and T for formats. That's a shortcut. And then you can simply do F4 for continuation. And then again proper spacing. That is through a shortcut of Alt-HOI. So we have one more number here yet to be translated into non-dollars, and so on and so forth. Okay, now once we are done with this, we'll place it into a different color category altogether. So for example, I don't want to change the font, but change the background color here onto the lighter end, and then I'll classify them. So for example, currently we are having current assets, short-term investments, accounts receivable. The notes which are given are for this particular year only. So I'll Control Access, paste it here, and remove these 2 lines altogether. Of course, the internal comment as well. So for current assets, I have cash and cash equivalents, short-term investments, accounts receivable, deferred commissions, prepaid expense, other current assets, and total current assets. Now, the moment we have this in form of total current assets, we have to separate this out in such a way that we have to present it in form of a summation. Okay, so I'll simply outline these with an upper and a lower border, present it as a sum, do Control R here so that we have copied the summation formula, and write total current assets, and also enter one line space here so that it looks a separate line item. This is asset side, this is my current assets, and so on and so forth. Now whenever we are starting a new category, like here in this case we are starting with property and equipment, goodwill, intangible assets, we'll begin with those. So property, goodwill, intangible, and other assets would form a total assets. Okay, so we'll classify them into long term. So you'll enter a new space here, okay, say total non-current assets. In some cases it is done, in some cases it is avoided. It's important to, when we'll do the valuations, to see the flow there. Okay, so where is my money is basically getting blocked. So I'll not do this, I'll simply copy paste the format here. Okay, I'll not repeat that, I'll simply copy paste the format. Now here comes our total assets. Again, this has to be a summation of my total non-current and total current. Of course, it will return the same number, and we'll copy paste the formatting here. We've done this for total assets. For liabilities, we'll enter a space here, as we did in assets format. Now in current liabilities, we'll include accounts payable, accrued, deferred, total current liabilities. So in space of total current liabilities, I'll simply mention the summation. Now we'll classify this. They are simply added the 3 row items, that is total current plus total non-current. We'll classify it into total non-current liabilities. See, this is to check a flow. When you're working onto a pitch book, this would give you a clear idea of where my money is simply getting blocked, what kind of cash flows we're looking at when we're looking at different kind of sectors. Okay, so this is for that item. Now, once we're done with for comments and contingencies, there aren't any items, so we can simply reduce this. Yes, we can keep it based on whether it's coming in the future or not. So if it is not here currently, of course, we will not project it then as well. As far as shareholders equity is concerned, we will simply remove the note part because we are talking of altogether different sheet here, and this is for 7 years or 8 years data. And a preferred stock, outstanding common par stock. So can we simply reduce this to preferred stock and mention these zeros here? Common stock is class A and class B per se, so I can simply reduce it to common stock class A, class B. So we'll have 4 plus 6 in this case, and 9 plus 2 in 2012. So I can simply reduce all these lines, restricted to common stock. Additional paid-in capital, accumulated and other comprehensive income, accumulated earnings, that would form my total stockholders equity. So I'll simply sum them up. And then finally, we have total liabilities and stockholders equity. We'll do the summation of my total liabilities and stockholders equity. Copy this format at both the locations. Okay, now this is not done yet. We can reduce the space for the first row and mention here LinkedIn, corporation, balance statement. Okay. So this, of course, has to be into a bigger font and, if required, a color as well. You can simply merge these cells and then highlight it accordingly. We can use the color combination depending upon which corporate or investment bank, etc., you're working for. Okay, so in our case, we will restrict it to our own colors which we are having. So it all depends upon if you're working for UBS, for example, they'll have a different color combination. JP Morgan will have a different. Goldman Sachs will have a different combination. For cash flow statements, we'll keep them nil for now. Why? Because these will be pulled from the cash flow. Because the cash and cash equivalents will be pulled from cash flow, so we'll keep them nil. In a similar way, for the forecasting of the property and equipment, there will be appropriations done in the future. But for now, it is fine. If you'd like to show a gross block, we'll enter one more line here and show the gross inside, and then less and accumulate depreciation in that case. Okay, so this is how you form a statement from scratch. So we picked it up, a live case, and formed it up. Now, if you're on a project for the next 3 years, we can simply add these rows here, start preparing the sheets, and so on and so forth. Let's go back to our original presentation. So this is what we were referring to onto the asset side, onto the liability side, and we have finalized it. Of course, for the totals that we have put in, you can insert it into different number. Now, one more thing. Whenever you're preparing a statement like this, what we can do is we can simply select the whole sheet and do F5. F5 is for special referencing. I'll simply select formulas or say a constants. Okay. Now, do you want to highlight formulas or do you want to highlight a constant? That's completely dependent upon us. Okay, so what I'll do is I'll keep the entered numbers, which are entered hard punched into a black, and the formulas which we have entered into a different color combination. So these are selected now. We will select a different color altogether for them so that we can understand where all the formulas have been entered. For example, here see we have, so I'll simply hard punch it. Okay. And so on and so forth. So in case of projections, of course, we pull the numbers from other locations as well as we hard punch sometimes. So that's why it is important to custom format it based on our requirement. So these and many other shortcuts is what you'll be learning when you'll be enrolling in for class in financial modeling. So it's just a demo of how to prepare a balance sheet or balance statement in really less time. Take it from 10Ks, etc., and pull it as per our requirements and attempt or change it accordingly. That's what we looked at. Copy these numbers and formatted it as per our requirements. Mentioned did the custom formatting. And of course, cash equivalents has to come from cash flow statements, and so on and so forth. So in a similar way, we have income statement. Like we have revenues, expenses, and gains and losses, which we do. Of course, it includes non-cash items as well. Now, this would give you a complete idea of an income statement. We ask often quite a simple questions to the wizards as well, sometimes to the working class people. Inside investment banking, they have failed to answer. Okay. Simple questions like, why do we use enterprise value with EBITDA? Why not equity? Yeah, whenever we are forming a ratio like enterprise value by EBITDA, why we are using EV by EBITDA? Why not total equity by EBITDA? Okay. What path is to be taken when it comes to return on net worth? Is it the post-minority interest or pre-minority interest? So these kind of questions. So unless we are thorough with these things and their application onto the Excel, it would be difficult for us to absorb and give the right answers. Okay, so let's begin from here. Saying net income, then I'll add my taxes. It will become profit before taxes. When I'll add my interest, amortization, and depreciation, it will become EBITDA. But when I'll simply add back my interest, I'll get my EBIT. And once I have added back my running expenditures from the office, like SGA, then I'll get the gross profit, and so on and so forth. So in a similar way, the way we form the balance statement, you can form the income statement overlay. Now, some highlights of our financial modeling masterclass, which you're going to take in Los Angeles and Toronto. Now, this is a full four days classroom training provided by the industry experts. The first and the most important thing is that whosoever is taking up a training session inside EduPristine's masterclass, it's coming from the industry background. Okay, so for example, you'll have managing directors, you'll have associates, you'll have VPs that will be taking up who are already into IB since some time, who are already working in the private equity, already working in the securities house, already working with hedge fund for that matter. Okay, so those would be taking up your classes. 20 hours of video tutorials, sample financial models, workbooks, PDF guides, filled and unfilled Excel templates for practice, 24/7 doubt clearing support, and of course we are approved by GARP and CFA Institute for CE credit hours. Now, what would you learn or read basically from these financial modeling classes? You'd be in a position to prepare very complex models in a very simple way in no time. That is, you will not end up taking 4 days or 5 days to prepare one company's complete financial model. Okay, you will do that in no time. Let's take an example of LinkedIn's model, which we'll see at the end of this session completely. Okay, so you learn a lot of shortcuts there. You learn how to design it based on your transaction that you're working on, and where all you can find quickly the errors, if there are any. First of all, you learn in forming of incomplete error-free reports, but if somebody, your colleague, etc., has prepared it, you would be in a position to find the errors there. Now, these are the details of the batch which we're beginning from 15th of February, 2 days masterclass, 4 days masterclass. So if you're opting for 2 days, it's a basic understanding, etc. 4 days would be quite advanced financial modeling. Our contact person is Mr. Austin Fernandez, as an email address and contact number. Some details about us from EduPristine side. We are authorized training provider for international certifications like CFA, FRM, PRM. We provided training to more than 10,000 finance professionals across the world, that is with more than 40 plus locations. Okay, we have provided more than 1 million man hours of training. Our investors are ASL partners, Dr. Mark Morby is a bond giant, Franklin Templeton and Rajesh Sehgal, again from Franklin Templeton. Our founding directors are Mr. Atul Kumar, Paramdeep Singh, Pawan Suprabhat, Mr. Rita Chandans. We have provided training to Fortune 500 companies, employees like Ernst & Young, Bank of America, JP Morgan, etc. Now the key strengths are basically you will get a clear platform, online platform to refer to the things again and again and again. That's one. Secondly, the experienced professionals which are coming across from the industry, which are building these models, using these models day in and day out, they'll be teaching you or providing you the sessions on that. These are the authorized training providers for CFA, GARP, Premier, and FPP. Some of the trainings which we have conducted inside corporates, Bank of America, Continuum Solutions, Franklin Templeton for CFA, ING Share for infrastructure and project financing, JP Morgan Financial Modeling in Excel, HSBC Risk Management Quant Analysis. Some of the institutes where we have provided the training. locations where we are covering up. We are covering, of course, the whole of the almost majority of the Europe, Asia, some countries in Africa, and of course North America, Middle East, and so on and so forth. So we are covering US, Canada, Mexico. These are some of the courses that we offer. A highlight of finance, non-finance, credit analysis, financial modeling, power sector modeling, equity valuation, financial reporting, CFA, FRM, PRM, and so on and so forth. The understanding of Basel III, which is getting implemented inside banks starting January. Okay, when it comes to Asia, like places like Hong Kong, Singapore. Okay, so if you have any doubts, we'll take up all the questions, or the important ones as we call them, one by one. We'll pick up all the questions one by one. Please note down the details. In the meantime, I'll be showing you up one complete financial model. Now, we prepared this, our team has prepared this for the LinkedIn Corporation when it was about to file for an IPO. So we prepared this complete model. Okay. You see kind of the charts that you'll be in a position to prepare at the end of these classes. So this would give you a complete summary of how does a financial model looks like. You'll be in a position to prepare these dynamic charts. The moment I uncheck or check them, you'll get these charts. Same applies for the ratio analysis. I want to look at activity ratios or liquidity or return or profitability. Dynamic assumptions, I can simply change the percentages here if required. But the moment I changes the end valuation should change. This is a revenue buildup, number cost buildup, asset schedule, equity, 2-point analysis, my income statements. See the ones in the blues? We have copied this from the previous statements when we're preparing this. Okay. So in our case, also there would be into blues. The ones in the blacks are the formulas which have been taken out. Okay. So in the same way, we'll have balance sheet, cash flow statements, which we'll prepare, ratios, and valuations through DCF, trading comparables, options valuations, company comparables, finally the football field chart. So if I ask a person who hasn't got a knowledge of how to build these models, on an average, candidates take 3 to 4 days when they're working for 5 to 6 hours or 8 hours on a regular basis every day. But if once you go through these classes, you can finish this in totality in no time. That is, you can finish all this in maximum of 5 hours. Yeah, that's the kind of speed that you'll gain once you're done with these classes, because you'll understand the art of preparing them, understanding the model, and putting them into numbers and so on and so forth. So if you have any questions now, simply post them and we'll take them one by one. In the meantime, you can take up or note down these contact details. If you have any further doubts about the classes, the content, etc., you can also post it via email. You can type them questions down in the chat window which has been provided to you. If you have any questions, just type them down into a questions section on the chat section and then simply post it. Any specific questions, we can answer them.
Yeah, Josie's asked a question. Josie, I'm going to unmute you so you can just address your question directly to us. Relate and customize. And do you cover advanced integrated models with roll forwards of asset classes? If you'd like one, you can just provide your email ID and we will send it to you. And about your second question, I will get you in touch with the required people and they will provide you all the information that you require. Do you have any further questions? Does anyone have any further questions? Okay, Josie, what I said was, regarding both your questions, I will get you in touch with the right people and they will be able to guide you the way you need. And to get into the first question specifically, yes, we will provide you sample templates that you can customize yourself. As for the second question, I will get you in touch with someone from the financial modeling department and he will be able to guide you accordingly. Does that answer your question, Josie? All right. Does anyone have any further questions? Ravi?
Yes, Alicia.
Yeah, so Josie is asking a question. She says, what level of Excel knowledge is required to succeed in this course? Could you please tell her?
Yeah, sure. Regarding the level, basically, if you have a basic understanding of Excel, that would be good enough to gain it. I mean, that's good enough a platform for us to build upon. But if you have an advanced skills already, then also you would be in a position to understand a lot, in the sense that how we use that advanced skill when it comes to financial modeling. So if you are a beginner, if you know basics of Excel, if you know the basic formula writing, etc., copy pasting and so on and so forth, like 10-15 functions, as I can say, that's good enough to begin with. Because the first session or the first hour or so that we'll take in would be onto the shortcuts only. So you'd be learning some 100 to 150 shortcuts of how to use that in Excel. I hope it answers the question. Any other questions, please?
Gary's asking, will you be covering advanced functions to complete more complicated models, including scenario analysis?
Yes, scenario analysis, sensitivity analysis, different valuation methods. We'll use the shortcuts of how to do a sensitivity on 2 variables, on 4 variables, like that. If there are multiple products of a company, how to arrive at a break-even points, etc. Sensitivity based on your cost of equity, weighted average cost of capital, your terminal growth rates, so on and so forth. So we'll cover all types of scenario analysis, sensitivity analysis. We'll use various functions like offsets, etc., etc., to cover all this in such a way that the moment you change a click or button, basically a button would be created or drop down would be created, you can change your scenarios and the whole output would change. So certainly we are going to cover that. In fact, we'll cover far more than what it is.
Gary, does that answer?
Great question, Gary. Yeah.
Does that answer your question, Gary? Okay, so does anyone have any further questions? Any further questions? Okay, if there are no further questions, we can probably end this webinar. Stay tuned, we will be having more webinars and you might be receiving a few more emails from us. We have webinars on business analytics and more webinars on financial modeling, maybe in the coming week or the week after that. So we will keep you posted. We will be sending you emails. So thank you everyone. Thank you for coming. I hope you learned something and we'll keep you posted about the next set of webinars that will be conducted.
Thank you.
Ravi, there's one more question by Gary.
Sure.
He's asking, will there be any visual basic concepts included?
Yes, the VBA part is also going to be there. We are going to learn it from the buttons perspective. We are going to learn it from how to form your own functions. Okay, so VBA is also going to be there depending upon how do we want to model our models, etc. So if you want to develop your own formulas for options, etc., which you would like to use inside a model, or if you would like to do a Monte Carlo simulation, knowledge of VBA is a must. So that's what we'll train on. Even if you don't know even the basics of VBA, we'll actually begin it from there and then take it to advanced level. So certainly knowledge of VBA would be there. VBA macros would be altogether a one session. Gary, can you unmute him, Alicia?
I don't think he has audio on. Gary, do you have audio? Do you have a mic? No, Ravi, his mic does not work. His audio, he can just...
No issues. Any other questions, Gary, or anyone else
Yes,
onto this?
he has
Okay.
another question.
Sure.
He asks, given that our people are accountants and have mid-level knowledge of Excel, will you tailor our course for our firm on a more advanced level?
Okay, so this is basically an advanced from investment banking side or from the application side, from the front-end finance business. This is not a basic course that we are offering here. So as you stated, your firm is already having the knowledge of the basic accountings, etc., the ratios and so on and so forth. So what we saw today, the balance sheet preparation, is just the beginning, and it will not take more than 15 minutes. In fact, you will not be even asked to prepare this. This would come in an unfilled templates kind. What you have to prepare is now going forward is how do you value it? How do you use DCFs? How do you use trading comparables? How do you use project financing? How does a mergers and acquisitions model works like? Okay. How does a complete information technology company's model works like? How does a global giant company's model works like? How does a SOTP works like? How does a pitch book looks like? Okay, so what are the contents of the pitch book and so on and so forth. So it would be really at an advanced level only. So we are not looking at the basics. We are providing, it will begin with the basics, but at an advanced level, end up at an advanced level. See, what we'll do is, depending upon the type of the batch, I'll tell you my own experience because I've been taking up these classes. So based on the requirements or based on the batch, basically, how the students are, if they are good, if they already know the basics, if they already know to do the basic valuations, then we take it on to the advanced level straight away. So we first test the waters, as we say, onto their basics, etc. And if they are good, we'll jump quickly onto the next level. If they're good there, then we'll jump onto the next level. So we'll not stop jumping up to the next level until and unless we know that they are not good with this. Okay, or the students are not good with this. So we'll touch base upon that level only. So for example, how does a minority interest, say, valuation works like? How would you value a minority interest? So all those things. If you can answer that, that's good. If you cannot, okay, then we'll stop there. We'll make you learn that first, and then we'll go on to the next level. And so it's actually tailor-made in the sense that we have a lot of content. We have enough content to take it for the beginners to the advanced levels. The one model which I showed you for the LinkedIn is just an example. If you cannot prepare it, we'll concentrate on to that rather than making you work on a simple FMCG company's model. Okay. So, Gary, you can bring your whole firm in, as you're saying that your firm and your candidates, etc., are would be interested to slightly onto the advanced level. You can tell us the numbers, how many of you would like to enroll, just shoot us an email and I'll try to do a customization slightly from the beginning itself for your classes. So just let me know how many of you would be interested in taking up, and then we'll try to do a call as well with you if required. Gary, any further questions? Alicia, please see that.
Yeah, he says, we will need financial modeling to really understand the cash flows of an entity as opposed to for valuation purposes. Can we customize the course for this purpose and eliminate the valuation specific topics, that is DCF, and he says COMPS, etc.
Okay, so you want to basically eliminate them. I thought you want to include them. As far as elimination is concerned, the first 2 days would be that only. For the first 2 days that we'll be taking up, the DCF, etc. would hardly take the 15, 20 minutes or 30 minutes of the end part. Okay, so the major part would be formations of your balance sheet, income statement, and cash flows, and then that would come. As far as elimination is concerned, the advanced would come after the 2 days masterclass. So what you can do is enroll for the exclusive 2 days masterclass which we are having, the first one. Okay, and that would cover up all the topics which you're talking about from the accounting perspective, purely on the accounting perspective. And slight bit of valuation, no, we cannot exclude it completely because it's inevitable and it's important. But yes, we can exclude it to the extent that your content or what you are looking for will be covered up easily. Secondly, if you have a good number of candidates or your whole firm would like to enroll in, yes, we can increase such few more examples there and then make this 2 days to 4 days in such a way that the topics which you are talking about, we'll be talking about that only. Yeah, so there is a slight bit of possibility of customizing depending upon the number of enrollments from your firm. Or else it can be used from the exclusive 2 days masterclass.
Gary, which are you from the US? Are you based in the US? Okay, you're based in Canada. Where in Canada?
Alicia?
Yeah.
I think the best thing would be just take his number, ask him to share his number, and then, I mean, some faculty or we can, in combination, call him and explain him everything.
Yeah.
So that would be the best thing.
Yeah, he's saying he's already in touch with Omkar. All right.
Okay.
So I will make sure that, this is carried forward, Gary, and we will try and do this as soon as possible. So if you have any further questions, do let us know, and just write back to us. I think you have Omkar's ID, and you have, if you need some other people's IDs, I can provide them to you.
Okay, great.
You're most welcome, Gary, and thank you, everyone. Thank you for coming. I think we need to end this webinar now. It's work day for us, and this is working hours for us. So, we need to wrap it up as soon as possible.
Thank you, everyone. Thank you for joining.
Thank you so much. Thank you, Ravi.
Thanks.
Yeah, bye-bye. Does anyone have any further questions? You can ask me. I think Mr. Ravi was in a bit of a rush.